for starting your week with us. Hello and welcome to Business Daily. I'm Lee in Seoul. We have plenty lined up for you today, so let's get started with a glimpse of the day's highlights. The slowing global economy, falling exports, and sluggish domestic consumption are all weighing on facility investment here in Korea. Recently, we have been seeing a shift in where foreign tourists choose to visit and shop when they come to Korea. These stories and more coming right up. A huge chunk of corporate bond contracts held by Korea's top 3 shipbuilders are set to expire next year. And with the drought and fresh orders, there are growing concerns that the cash-strapped companies may be running out of time. Our Lee Min-young starts us off.
Concerns are mounting that Korea's shipbuilders might go belly up next year. Financial sources say a significant amount of corporate bonds issued by the industry's top 3 companies, Hyundai Heavy Industries, Daewoo Shipbuilding and Marine Engineering, and Samsung Heavy Industries, are due to expire next year. The total amount stands at around $1.9 billion. Daewoo has to pay back roughly $900 million, while Samsung and Hyundai Heavy need to each return $510 million and $580 million. Market watchers say it won't be an easy task as the companies have been suffering eye-watering losses due to low oil prices and slowing global demand. The companies won only 5 contracts in the first 4 months of the year, and Daewoo posted an operating loss in the first quarter. With growing fears that the shipbuilders could file for bankruptcy, some experts say it's time for the state to bail them out.
The Bank of Korea could issue more currency and the government could inject money from its budget. A separate fund could also be set up so that the losses caused by corporate restructuring could be shared instead of watching one company collapse.
But critics argue that by printing more money to help the ailing shipbuilders, the central bank would negatively impact the livelihoods of the public in order to save companies that have been weighing down growth in Korea's corporate landscape for years. Lee Min-young, Business Daily.
Mounting fears about Korea's grim growth potential have kicked the corporate appetite for new projects, especially when it comes to facility investment. And some say the lack of activity on this front spells trouble for businesses down the line. Our Lee Joo-young has more.
New facility investment is falling in Korea, and it's falling hard. According to data released by Financial Supervisory Service, only $1.5 billion worth of facility investment was made in the first 5 months of this year. This is only about a quarter of the investment made during the same time last year. The number of investment projects has also dipped from 27 to 23 this year. The financial regulator says this is largely due to the sluggish global economy that has put Korea's exports on a decline for 15 straight months. Lackluster domestic consumption during the January to March period also weighed down investment, with private spending falling by the largest margin of 1.7% on quarter, showing levels similar to the 2008 financial crisis. If there were 5 firms that spent more than $420 million in facility investment during the first 5 months of last year, there are none so far this year that match in scale. New facility investment from sectors like shipbuilding, shipping, and steel were non-existent, while a large number of firms substantially cut back on their initial projects or canceled them altogether. Experts say if investment continues to fall, it can critically damage Korea's growth potential and eventually marginalize Korean firms on the global scale when economies start to recover in 5 to 10 years' time. They also add the government needs to pull the plug on supporting highly indebted zombie firms and remodel financial policies to focus on companies with greater growth potential. Lee Joo-young, Business Daily.
And to tell us more about last week and this week's stock market action, we have our Business Daily's markets contributor, Choi Jin-seok, joining us on the phone today. Hello, Jin-seok.
Thanks for having me, Jin.
All right, let's get started by looking at the Korean stock market. Tell us about the last day of trade and the market's overall performance last week.
Yes, The Korean equity market plummeted on the last session, Wednesday, of a holiday shortened week. The Kospi fell by 0.4% to close at 1976, failing to close above 1980 for two consecutive sessions. Although both individual and foreign investors bought massive amounts of shares on the Kospi, weak economic data from China, worries over an oil supply glut, and fears over a global economic slowdown prompt institutional investors to dump shares. The Kospi fell as well, closing at 694. On a weekly basis, the Kospi slipped 0.7%. Investors were in the so-called wait-and-see, typically seen ahead of long holiday weekends and important global economic data announcements. One of the positive signs in the Korean market was that foreigners continued to buy shares.
Then how did the Korean stock market close on the first day of this week?
Yeah, the market kicked off in weak territory this week. The Kospi fell by around 0.4%, closed below 1970. Both foreign and institutional investors sold massive amounts of shares amid weak economic data from both the U.S. and China. Retail investors were on the buying trend, but it wasn't enough to lift the index from last week's decline. The Kospi closed with a slight downtick as well. As the country's stock market has failed to break out of key resistance levels, Korean investors are now turning their eye to markets overseas. The net purchase of foreign shares by Koreans reached an 8-year high in March, according to the Bank of Korea and industry sources. Korean investors both bought $5.66 billion worth of foreign stocks that month. That amount, which more than doubled from $2.75 billion a year ago, is the highest since November 2007. The Korean government has been facilitating outbound investment by offering tax exemptions on returns from foreign equity funds starting February 29th.
Now, as you mentioned earlier, we have a series of economic indicators set for release this week.
That's right. If you remember, on Friday, we saw U.S. jobs data come out, with the private sector only adding 160,000 jobs last month, missing market expectations by a large margin. The focus this week will be whether slower job growth had an impact on U.S. consumers. April U.S. retail sales data reported on Friday local time will offer some hints on this front. Market watchers expect a 0.9% gain compared to the previous month, which it saw a 0.3% decline. Q1 GDP growth from the Eurozone and China's industrial production, retail sales, and fixed asset investment will draw a lot of attention as well, because investors are now waiting for signs that might help mitigate growth fears globally.
And earnings season in the U.S. is coming to a close. Which companies are reporting their quarterly results this week, and what else is on the calendar?
Yeah, the theme of this week's earnings season is consumption as well. Large U.S. retailers, including Macy's, Kohl's, Nordstrom, and JCPenney, will unveil their quarterly results. According to Thomson Reuters, the U.S. retail sector is expected to have enjoyed a 23% increase in profits last quarter compared to a year earlier. Other than economic data and the earnings season, the vote from Brazil's Senate on impeaching President Dilma Rousseff and the Bank of England's interest rate decision will be what global investors need to take a close look at this week as well. This has been Choi Jin-seok for Business Daily.
Korean cosmetics makers are expected to tap deeper into the Iranian market after the two countries agree to waive import inspections. According to Korea's Ministry of Food and Drug Safety, local manufacturers which have met the good manufacturing practice requirements will be free from inspections in Iran. The ministry expects the measure to boost exports of Korean cosmetics to the Islamic Republic. And the two countries also agree to set up a promotions hall in Iran within this year, which will display and sell Korean cosmetics. Korea's financial services industry has shed at least 1,800 jobs over the last 12 months. The Financial Supervisory Service revealed on Monday that the number of workers in the sector has fallen to about 373,600. Now, that's down from 375,400 at this time last year. However, the number of actual job losses is estimated to be higher, as the total number of workers also reflects those who are newly employed. By sector, banks slashed around 2,000 jobs. Life insurance and property insurance companies cut 600 to 700 employees each. Authorities attribute the job cuts to worsening profits caused by the prolonged period of low interest rates. Millions of Koreans got back to work today after the 4-day extended weekend, during which many traveled outside of the country. And tens of thousands of Chinese and Japanese tourists also came to Korea during the holiday weekend to spend a few days in and around Seoul. Our Kwon Jang-ho has this report.
The recent holiday has been a golden week, not just for Korean vacationers, but for the Korean tourism industry as well. According to figures released by the Justice Ministry, there were over 140,000 foreign visitors that came to Korea between Thursday and Saturday, and that number is expected to reach 180,000 by the end of Sunday. The Korea Tourism Organization believes the total number of tourists for May is on course to be 5% higher than last year. Around half of those visitors have come from China, with the biggest single group coming from a Chinese healthcare firm, the Joymain International Development Group. On Thursday, over 4,000 of its employees came for a company-sponsored visit and were treated to a samgyetang tasting party where they had a chance to sample the traditional Korean chicken and ginseng soup. Another 4,000 employees from the same company are scheduled to arrive on Monday, and the Korea Tourism Organization says it expects the visit by the two groups will contribute $42 million to the Korean economy. That will bring to an end 2 weeks that saw a huge influx of Chinese tourists. China celebrated the Labor Day holiday on May the 1st, and the KTO said during the 3-day period from April 30th to May 2nd, there were almost 63,000 visitors from China, up almost 10% from the year before. China isn't the only country sending a growing number of visitors to Korea. Figures released on Sunday showed that the number of Japanese tourists saw a year-on-year increase for 2 months running in February and March this year. That comes on the end of a 41-month streak of decline going back to September 2012. A Korean government think tank says the resurgent yen and the government's recent promotion of Korean tourism in Japan were the main factors behind the rise. Kwon Jang-ho, Business Daily.
And with the influx of Chinese visitors these first 2 weeks of May, there's a shift in what they're buying and where they're going as well. Our Eunice Kim takes a look.
Seoul's shopping district of Myeongdong has become so familiar to tourists from China and Japan that it's natural to interact with sales staff in their native tongue. And while Myeongdong is a must-stop for many, more Chinese travelers are also venturing off the beaten path, further south to Itaewon and Gangnam. Looking at subway searches by Chinese tourists ahead of the Labor Day holiday, Itaewon, Gangnam, and Konkuk University all made the top 20 for the first time. Sales at department stores in regions south of the Hangang River are also seeing a boost. Chinese love of iconic designer luxuries is well documented around the world. But increasingly, their purchases in Korea are shifting toward trend-conscious goods. Topping categories of purchase were character-based goods, followed by clothing and accessories. Many picked up snacks popular among Koreans like honey butter chips and fiery jampong ramen noodles to take home with them. Then what are they choosing to eat while they're here? If spicy stir-fried chicken, 닭갈비, and Korean beef barbecue galbi were on their to-eat list before, now they're being exposed to the health benefits of samgyetang. The traditional Korean chicken soup infused with ginseng was featured on the popular Korean TV drama Descendants of the Sun, and many pop culture enthusiasts are trying it themselves on their trip here. While the busloads of tour groups may be most visible, more Chinese are opting to travel alone or as families. And as they plan out their own customized itineraries, it remains to be seen how Chinese tourists will be best served. Eunice Kim, Business Daily.
And that brings us to the end. But we'll be back tomorrow with more at the same time, same place for your Business Daily. So don't forget to tune in then. Thanks for watching, and bye-bye for now.